Hi everyone, and welcome to UBS Trending. I'm Anthony Pastore. Equity markets in 2022 have been off to a volatile start. High inflation, changing monetary policy, a war in Europe, and the continued impacts of the pandemic. They all play significant roles here. And if history is a guide, this volatility could remain higher than normal ahead of the midterm elections in November. And as we get closer to November, what should investors know? And of course, the big question is, how should they position their portfolio? So joining me now is Nadia Lovell. She is the senior equity strategist with the Chief Investment Office here at UBS. Nadia, always a pleasure, and thanks for being here in the studio with me.
Thanks for having me, Anthony.
It's hard to believe that the midterm elections are on their way, but they are, and they're happening this November. And we're not going to talk about policy here today. We're going to save that for a different conversation. Today, we're going to talk a little bit more about the markets and maybe expectations and outlook. But I wanted to start with you because CIO's base case right now is that the House will flip to Republican control at the very least. There are certainly a lot of races that are going to be watched closely. But what's the market outlook given the expectation here, and what can history tell us based on what we've seen in the past and these other midterm elections and how the markets actually fared in the past?
Yes, Anthony, as you said, our base case is that we think that the Republicans will win the majority in the House, but that means that we'll have a divided government. And whether that be if the Republicans win both chambers of Congress or just one, history would suggest to us that that means political gridlock. So that also means that it will make it difficult for the administration to push through any major policies. Now, in a scenario, of course, where the Democrats retain control of Congress, that could also give the administration an opportunity to make progress on the Build Back Better legislation, now assuming that nothing gets passed before the midterm election. Under that scenario, it could mean some changes to tax laws or increased spending on green energy initiatives, like tax laws around the R&D tax credit could change. That could have implications for some companies, particularly in the defense area. And of course, an increased spending on green initiative would be positive for those companies that have exposure. But I think that under any of those scenarios, we really don't think that it changes the outlook for the broader market.
It's interesting because to say that today's environment is unique is probably an understatement coming off of a pandemic, which is still happening. No matter what part of the world you're in, there are various levels of the pandemic still raging. And of course, inflation, the war in Ukraine, all the things that I mentioned at the top. So there's volatility that is consistently in the markets. Do you think that this volatility will continue depending on what the midterm results are? And what actually do you think the midterms will have as far as impact on that vol?
Yes, as you noted, it has been a volatile year to the markets, to say the least, all of those headwinds that the market is confronting. And so we think that it's going to take time for the market to work through some of those headwinds that you spoke about. But even in a typical midterm election year, volatility tends to be elevated. You have economic policy uncertainty that tends to rise. And if you look historically, the market tends to trade sideways in the months leading up to the election. But I think what's encouraging, Anthony, is that after the election, the market typically sees a rally regardless of the outcome. If you look at the data dating back to 1928, in the 12-month period post the midterm election, the market returns about 13% in that 12-month period. That's more than twice of what it returns in years outside of a midterm election. And so we think that regardless of the outcome, that the market will be okay. And what's really going to drive markets is going to be monetary policy and geopolitical.
Absolutely. And if history is any kind of an indicator, President Biden would likely, like his predecessors have done, maybe rely a little bit more on executive orders to get some of his political agenda passed, specifically, as you mentioned, Nadia, with climate change. I know that's obviously a huge agenda for the Biden administration. So it'll be really interesting politically even to see how this all shakes out once the results come in November. Long way to that. Which brings me to my final question for you, which is for an investor watching this conversation today and knowing what history has shown about, as you talked about, there are typically optimistic market moves after any election, especially midterms, but again, sideways leading up to it. How should investors be positioning themselves right now?
Yes, of course. As we approach the midterm elections, we know the headlines are going to increase. The political rhetoric is going to increase, and that could cause some volatility in the market. But I think that what's important to focus on, that our core view is that we expect a divided government, so we are not expecting any major changes in policies on the horizon. We are looking for a more range-bound market, so we don't think that due to a midterm election that investors should be making any major shifts in their portfolios. But as I mentioned earlier, we think that what's going to drive the market is going to be monetary policy as well as geopolitics, the war in Ukraine. As we look forward for the next balance of the year, we do expect a more range-bound market because, as we know, the Fed is about to embark on what's likely to be the fastest pace of interest rates hikes since 1994. Right, so that has implications. And so in this environment, we think that it's better to have a more balanced approach with some exposure to some defensive areas of the markets like healthcare, and balance that out with some more cyclical areas of the market like energy. We also think that there are opportunities in areas of security in light of the war in Ukraine. We think that there's going to be increased spending on energy security, cybersecurity, food security, and national defense. So there are some things to do in the portfolio on the margin, but we wouldn't be making any major changes just simply because of the midterm election.
Right, and just to reiterate that, I know that CIO doesn't really expect any major shifts in policy. So right now, CIO, your office expects that perhaps right now it'll be a largely non-event for any major equity moves for the broader market. So thank you for that, Nadia. Always good to have you here and get your insights. And I know we'll be talking about these midterms quite a lot until the run-up of for the run-up of that to November. So I'm sure we'll have you back.
Thank you, Anthony.
Great. Nadia Lovell, always great to see you. And for more information, we've got a full website that was recently launched. You can check it out at ubs.com/election watch, all one word there. And in the meantime, you can also follow us on social media, LinkedIn, Facebook, Instagram, and Twitter. Plus, you can check out all of our past UBS Trending episodes on demand on our website and on the UBS YouTube channel. Until next time, I'm Anthony Pastore. We hope you have a great day, everybody. And remember to keep your eyes on what's trending. We will see you soon. Thanks, everybody.